So hope the food comas aren't too bad, and always get the. It's better to have this shift, I reckon, than the graveyard shift because no one wants to be last. So I'll let you dwell on that for a second. 45 years filling out spreadsheets just to end up playing bingo in a nursing home. Um, I'm as polite as possible about it, but fuck that. Um, when I think about superannuation, I really think about, well, what does my retirement look like? How am I going to spend my golden years? I work bloody hard all my life, and I want to make sure I have a good retirement. And what's a good retirement look like? Well, your kids are probably traveling the world or getting married and having kids of their own. And as a grandparent, you're going to want to go and travel and see them and have a nice, comfortable retirement. And that's getting harder and harder and harder. And so it dawned on me that as a Bitcoiner, I always want more Bitcoin. So where do I go and get more Bitcoin from? It's not easy. The family budget is the family budget. You don't typically have large amounts of spare cash floating around as your average family. And so when you've got superannuation, there's a pot of money there that you can potentially deploy and put into Bitcoin. And when I first explored the question with Australian Super, who I was with, um, I basically said, look, can I get some allocation to Bitcoin? And this was back in sort of 2020, 21. And I was met with all the usual fear, uncertainty and doubt, like it's used by terrorists, it's a Ponzi scheme, it's this, it's that, it's the other. And I don't need to tell you all that sort of nonsense that you hear from your average financial services industry or planner or whoever. And so I started looking into it for myself and worked out that you could move your superannuation into a self-managed super and then buy and self-custody Bitcoin, which to me at the time was absolutely wild. And I'm very glad I did it, and I don't think I'll ever go back. Um, but I just wanted to talk a little bit today about traditional super and hopefully open your eyes to a few things about the way that it works. And this is all stuff that I've worked out after I moved my superannuation into Bitcoin. I kind of jumped in with both feet and did it because I was just super keen to buy more Bitcoin. And then the longer I've dwelled on that decision and the more analysis I've done and the more understanding I've gained, the more it convinces me that I did the right thing, even if it was maybe a slightly uninformed decision at the time and felt very risky. The longer I've been doing it, the more people I've helped do it, the more convinced I am that it was the right thing to do. So as of 2024, the superannuation pot of money in Australia is worth about $3.5 trillion, which is pretty substantial. It's one of the world's largest pension industries and is generally very highly regarded. Lots of people have different opinions around whether that money should just be in your pocket as higher wages. But if you're like me, I don't believe for a second that companies would pay you 12% more just because the superannuation industry didn't exist. The fact that they're compulsorily having to contribute to your pension, I think is a good thing. But as far as I'm concerned, I want to be able to deploy that money the best way I see fit to provide for my pension in the future. So by 2040, it's predicted that that pot of money will be worth $10.5 trillion. Not an unreasonable assumption in that time frame. But I put Pooh Bear there for a good reason. That's going to turn into a massive honeypot for the government. We already see, with potential changes to legislation in terms of tax over $3 million in your pension pot, that amount of money is going to be extremely enticing for governments, and so the rules will change, and whether it's the age of retirement or the levels of tax or any number of other things, and they will come after your Bitcoin or will come after your pension. So my view is the sooner you get your money out of the traditional system and into self-custody Bitcoin, the more you're kind of insulated against that kind of risk factor. Just in terms of allocations for a traditional managed fund, this is kind of the average numbers for managed funds in Australia. So 27% international shares, 22% Australian shares, 11% bonds in Australia, 9% cash, 8% international bonds, then infrastructure, unlisted property, unlisted equity, and then bits and pieces, and absolutely no Bitcoin. it's fascinating looking at those allocations. There's lots of speculation as to how accurate they are in different funds. I was watching a podcast the other day talking about some of the pension funds in the US, for example, where they talk about unlisted asset allocations and how they're actually double what they say they are. And they do that so that they can protect the performance figures of those funds. And one of the really important things to note with superannuation in Australia, the super funds are legislated to perform within a bound. So if they underperform their peers, in the first year, they will get a warning. In the second year, they will have to close memberships to new members. And in the third year, they'll have to merge with another fund. So it is in their own interests legislatively to perform in line with their peers. So if the average is 8% a year in terms of compound growth of an Australian super fund, if you're at 6 or 5, you're in trouble. And so the volatility of Bitcoin inherently scares them because they could have a year where they underperform in the Bitcoin bear market. And then they can have other years where they massively outperform if they were allocated to Bitcoin. So they are actually not incentivized in any way to have overperformance. Now, as a customer and as a person looking to retire, I want the best possible performance from my super fund to provide for my retirement. I don't care about performance of the super fund. I care about my personal performance. And so if they're not incentivized to maximize my returns, I've got a problem. So that's where moving Bitcoin or super into Bitcoin can really solve that. Um, there are always lots of articles in standard press like the SMH or the ABC or whatever else that say, how much money do you need to retire comfortably? They're woefully underbaked every time they're published. By my reckoning, usually by about a factor of 5. Um, I don't know about you, but $300,000 when you're in your early 50s with a potential need to support yourself for 25 years post work, and 25 years is the average duration of a retirement. 300 grand is not going to last 25 years. So to me, that's woefully underbaked. One of the figures that they put into these things is like, how much do I need to spend on groceries a week? And when you read a lot of these articles and the way they construct the numbers, usually they estimate that you need $100 a week for food. Now, I don't know about you, but every time I walk in the supermarket, it's $100 for a bag of shopping, and that's not going to last me a week. It's going to probably last me a day or two. So I think that's woefully underbaked. And so doing some kind of rough numbers, I worked out that if you want to retire in 2040, as an example, assuming 8% a year compound annual growth rate for your super and assuming 4% for inflation, how much would you need to retire? Oh, how much would you need in your super fund today to be able to retire in 2040 with 3.2 million? And that 3.2 million is my calculation of roughly 3 or 4 times the numbers we saw on the previous slide, extrapolated over 25 years. And 3.2, should kind of give you enough to have a reasonable retirement. And so if you don't have $1 million in your super today, you will not have a comfortable retirement. So you need to think about, how do I allocate my assets in my super to grow it sufficiently to get to that number? Another really interesting statistic that blows me away is the average age of retirement has increased 10 years in the last 20. So I remember when my dad retired, he was 57. And 20 years ago, that was pretty much the average age of retirement, like mid 50s to early 60s. And so it's gone up 10 years. So if you plan to retire in the next 20 and that trend continues and the legislation changes, the average age of retirement changes, do you want to be in your mid 80s before you retire? And I don't know about you, but I certainly do not. This is Sam. Sam is the Chief Investment Officer at Host Plus. They are targeted at younger members. And Sam, this number of 161,000 is the average kind of balance for superannuation. 51% of Host Plus flagship My Super option is invested in unlisted assets at the end of last year. Now, if you drill into what unlisted assets are, it's things like commercial real estate. It's assets that don't have to be marked to the market price. They only have to revalue them every 3 years. They have massively over allocated to them because they're higher out the risk curve. So they get better performance figures and returns from those assets. So he's massively overweight unlisted assets because he can mask the performance of the fund to stay in line with the legislative requirements in superannuation. Uh, and as he says, if I was CIO of another super fund without young demographics and without strong cash flow, I couldn't behave like I do. So he's taking a lot of risk on behalf of his members. And honestly, you could call bullshit on the performance of that fund. And if he was true to the valuation of the assets on their balance sheets, they would be underperforming in the current market. We all know issues with commercial real estate. Offices are empty, half empty post-COVID, and working population isn't heading back into the office. So they're going to get to a point, in the course of the next 12 months where they're going to have to revalue those assets, and we could see some dire consequences. Like you only have to look at the news today in the States around commercial real estate. It's a time bomb waiting to go off, and they're expecting hundreds of banks to go out of business purely based on the performance of commercial real estate. So it's catastrophic, and it's going to come for your super too. Uh, a slightly brighter note, if you look at Host Plus, so July 2019, if you put $50,000 into Host Plus and $50,000 into Bitcoin, risk does not equal volatility does not equal risk. Bitcoin is volatile. We know that. It goes up, it goes down. Host Plus, over that 48-month period, you would see a 31% gain, 4 years. Bitcoin, 853. Now, it's easy to pick any time frames and make it look really good. But if you pick 2 dates 4 years apart with Bitcoin, the minimum rise is 100%. Even if you buy in at the absolute worst time top and compare it to any 4-year date later on, minimum amount up is 100%. So when you're thinking about super, like I talked about earlier, the investment time horizon of a standard super fund is 2 years to make sure that they don't have to close to memberships, that they don't have to merge, so that they're performing. Well, my investment time horizon is my retirement, which is going to be 20 years or 30 years, depending on how old you are. And therefore, the short-term volatility of Bitcoin shouldn't matter because you're putting Bitcoin into these savings for a long time frame horizon. So low time preference, Bitcoin is the most perfect asset to have in your retirement fund. So the compound annual growth rate of most super funds is roughly 8% a year. Over 5 years, the last 5 years, it's been about 4.3%. And over the last 10 years, it's a bit shy of 6%. Bitcoin is averaging 49% a year over the last 10 years. It's just incomparable. Doesn't mean it continues, but so thinking about an even more generous retirement rather than 3.2 million, I'd like to travel a bit and go and see the grandkids when I have them, and go and have some nice holidays. So if you want to retire with 5 million, enough to last you 25 years, how much Bitcoin do you need at what age? So I used the same structure that we used earlier that the article put together. And the most fascinating one, if you assume a 49% compound annual growth rate, and that's not going to continue, but whether it gets more or less, who knows? Nobody knows what the price is going to do. But if you're 22 to 24 years old, you need about 8,500 sats to retire with $5 million when you hit 67. It's pretty awesome. And even more realistically, if you're 50 to 54, then 3 Bitcoin probably gives you a $5 million retirement by the time you hit retirement age. I think it's pretty stark. All the slides will be available, so don't feel like you have to write this down. Setting up a self-managed super fund is not complicated. We put together a website called bitcoinsuper.io. You can visit that. There's a setup page on the website. It talks you through all the steps and decisions you need to make. It's a bit of a laborious process. There's lots of paperwork, but it's not complicated. So it can be done in 3 to 6 weeks. 3 to 8 weeks, depending on the time of year that you're doing it. We recommend eSuperFund as one of the fund management companies out there that are very easy to do business with. They kind of follow the bouncing ball process for you. We always recommend a company trustee rather than a personal trustee. It just gives you more flexibility. That's probably the only major decision you need to make. They then help you set up your super fund, help you set up a bank account for your super fund. You can then set up an exchange account in the name of your super fund, and then buy Bitcoin with it, and then put it into self custody. I've done 100% allocation. Lots of people can do partial allocations. There's really up to you how you want to allocate. But when I look at Bitcoin, I can't see anything else that's performing like it. So why wouldn't I go all in? Because I'm not going to touch it till I retire anyway. So even if it's volatile over the next 5, 6, 10 years, at any point you can change your allocation. Obviously, it's a capital gain if you sell some of your Bitcoin, but it's no different from owning stocks, shares, bonds, whatever. And at least you're in control of your own money and your own destiny. So my investment strategy is invest 100% of my funds into self-custody Bitcoin. It's the best performing asset in the last 10 years. I've done 100% allocation. Lots of people can do partial allocations. There's really up to you how you want to allocate. But when I look so at Bitcoin, more than happy to do questions. I kind of rip through it because the questions usually take longer than the prezzo. So I think Dale's grabbing a mic. So.
Yeah, thanks for that. Just the question around existing self-managed super funds and the existing sort of setup, with trust deeds and so on.
Yep.
Does it need to be, a new fund that set up for this type
No,
of
not at all.
investment?
You can partially allocate from your existing self-managed super. It's your money. You're self-managing it. You can sell whatever position you have in part of your fund, and obviously you need to have separation of funds. So it's important with Bitcoin that you set up an exchange account in the name of your self-managed super fund, just like you have a trading account in the name of your self-managed super fund. And then when you self-custody that Bitcoin, it's important that it's not commingled with any other personal Bitcoin you might own. It needs to remain separate, and then when you get to audit time, you obviously provide proof that the coins are where you say they are. In large part, that can be as simple as providing a CSV file that shows all the trades into the wallet, and your auditor will accept that. So it's pretty straightforward. Depends on how broad or narrow your investment strategy is. My investment strategy kind of blew the auditor's mind. They're like, "What? What about a diversified portfolio?" And I'm like, "Well, I could have a diversified portfolio, but one of the best recent examples of why that's a bad idea, Warren Buffett convinced Bill Gates to diversify his portfolio, and that basically cost Bill Gates $900 billion. He would have been the world's first trillionaire if Gates hadn't got him to diversify out of his Microsoft stock. So a concentrated asset allocation for me works for growth because I want to retire with as much money as possible. A diversified portfolio is great for protecting what you already have. It's not great for growing large amounts. Now, our favorite phrase, Pete and mine at the Bitcoin Advisor, is "you do you." Like, I'm not going to tell you how much to allocate or not allocate. It's entirely your choice. And you do the numbers for yourself, and you work out what sort of balanced portfolio you want, or whether you want a concentrated portfolio that's going to generate outcomes that certainly I'm looking for. And I'll take that risk for a period of time, and I'll reevaluate regularly and think, well, do I now need to still be 100% Bitcoin? Maybe it rips to $10 million a coin. Well, maybe I don't need 100% allocation at that point, and I want to do some other stuff. But I really see my personal Bitcoin stack as my early retirement fund, and I see my self-managed superannuation stack as my generational wealth. And that's the stuff I'm going to pass on to my kids.
I kind of have three things, but and they're kind of nonsense questions, so just shoot them down. Um, when it comes to like, I got 30 years before I'm 65,
Yep.
and even if Bitcoin becomes worth a stupid amount of money in my super fund, do you ever think that there'll ever be a law change where you'll be able to actually access it early if you can show that you can retire and live 100 lifetimes with the amount of money that's in there, or do you just think that's always going to be locked up?
If there's one guarantee in life, they'll move the goalposts. So maybe.
Maybe. Okay. Do you have any concerns about? I heard that there's some legislation coming in that talks about taxing unrealized gains in super funds.
Yeah,
That bothers me
horrible.
greatly.
It's absolutely horrible. So I did a tweet thread on it. My Twitter handle's Andy BTC Advisor. I did a tweet thread on it. PwC put a paper together that did an analysis of the implications of that tax and the percentages that it would impact. Um, it's not just bad for Bitcoin, it's just bad generally. Taxing unrealized gains would be a first anywhere in the world. Like nobody else does it. So it's absolutely bonkers. Um, now, the implications, I did a similar table to one of the others that I did. And basically, if you had $3 million worth of Bitcoin with a 49% compound annual growth rate, like I've been using for the other calculations, over a 5-year period, you would lose 16% of your Bitcoin if you had to pay the tax bill out of the asset that you hold. So it's horrible. And I certainly don't want to be giving up 16% of my Bitcoin in a 5-year period just for paying unrealized gains. Now, the actual implications of that may differ because of the bull and bear markets with Bitcoin. You don't get a refund on unrealized losses per that legislation. You only get a carry forward. So it might be one bad year and then one neutral year because you're offsetting the prior bad year, but then you're going to have 2 bull years, so you might have a problem during that. So it's horrible legislation. There is every chance they'll pass it because, as Labour did with the tax refunds recently, they said they weren't going to change it this term and they would wait, but they didn't. They changed it anyway. It's actually, as far as the public are concerned, it's like a harmless tax increase on superannuation if you're taxing like very wealthy people who have more than 3 million. But 3 million in superannuation isn't going to make you very wealthy in 10, 15, 20 years' time. And they haven't index linked it. So it's generally a horrible piece of legislation. So whether it passes or gets pushed through, I don't know. I would expect a lot of lobbying to stop it happening because never mind Bitcoin, if you're a farmer, as an example, and your farm becomes worth more, do you sell a back paddock to cover your tax bill? Like it's stupid, right? So, and a lot of people have other investments in self-managed super, like residential property and rental properties. You can't just sell a bedroom to cover a tax bill. So the practical implications of executing it are also pretty horrible.
Is there anything that we can do as, I suppose, Bitcoiners and taxpayers to try to make it not pass? Like, I'm completely ignorant of how that works.
You can lobby your local representative and you can scream on Twitter and you can make as much noise as you can and vote accordingly, right? Like I think they're going to push it through, but hopefully, the right side of politics, if they get in the next election, maybe it's something they reverse. But, have you ever seen a tax reversed? It doesn't usually happen. So.
And my third and final point was more of a, a statement that I thought it might be interesting to hear your comment on. So I was thinking about the heat and eat situation with retirees, that there's just not enough money in the pension for them. I was like, if the Australian government took $1,000 and put it into Bitcoin in a retirement account for every newborn kid in Australia, it's about 300,000 newborn kids a year, or $300 million in expense. That would go through, is it 17 halvings before they're 64?
It'd be wild.
Yeah, so if you just doubled it, because the supply halves every 4 years, it's something like $131 million that each newborn child could have at retirement if we took that. Does it seem like a reasonable sort of thing to investigate?
Yeah, absolutely. Like, I mean, if you're a parent, put some Bitcoin in a wallet and leave it there. And give it to your kids when you retire. I mean, a lot of what we talk to clients about as well is strategies for asset protection as well, for personal Bitcoin, never mind super, just to make sure that you're protecting your Bitcoin and the Bitcoin for your kids and so on. I won't go into it too much, but if you want to grab me afterwards or reach out on the website, then we're always talking about the best way of using trusts and setting trusts up for your kids. So there's something called a testamentary trust, which allows you to move your assets upon death into a trust structure that you define the beneficiaries and the disbursement rules. So say Bitcoin rips, you pass away and your Bitcoin's worth $50 million, you don't want to drop that onto an 18-year-old kid. It's just going to make a mess. And so trust structures are a really good way of making sure that your beneficiaries are looked after in a protected and safe manner, and that you're protecting those assets for generations to come. Like a trust can be a really good mechanism. Say your kid's 25, you have a family trust. The trust can buy the child a house at 25. The child can benefit from that house. Maybe they get married and then get divorced. It happens. Usually the ex-wife would take half of the house and half of the Bitcoin, but not if the trust owns it, because the trust owns it, not the child. So the child benefits from everything, but it's not put at family law risk. So, and there's a million different scenarios where trust structures can help with that kind of thing.
All right, we've got time for some more questions. So
Thanks for running this, Andy. It's great to hear all of this. I'm kind of new to the party with SMSF, but I'm thinking about doing it now. I just wanted to ask you about strategies for after you've retired. So pension versus like, how do you meet out what you've got? Do you borrow against it? What's the strategy at that point?
Great question, and I haven't retired yet, so I'm not into all the intricacies of it. But at the moment, there is a transfer balance cap is the phrase, and so you can, at retirement, once you've specified retirement, you can move up to currently $1.9 million out of your accumulation phase, which everybody's in, into your retirement phase, and that's when you start drawing a pension. So you can move $1.9 million worth of assets, doesn't matter whether it's cash, Bitcoin, whatever, and that moves over tax-free. So whatever capital gain has occurred on the Bitcoin that you've bought, up to that value, you can move it into pension phase, and you can live off that pension. Now, you can allocate that $1.9 million however you like. Like lots of the superannuation providers also provide pension products, which are, again, products that they invest to generate a return, and that's out of your pension phase. Anything left behind in your accumulation phase, obviously it can just stay there and do whatever, or you can lump sum it out, or and pay whatever capital gains is due on it at the point at which you lump sum it out. So really then in retirement phase, it's how much do you need to live on? You might take half a Bitcoin out and buy a yacht. You might take half a Bitcoin out and buy somewhere in Colorado to go skiing every year. We all have grand plans for retirement. So it's really up to you what you do with it. But that tax-free component is like that. And that's index linked so that it goes up in increments of 100,000 every year or two based on inflation. So by the time I retire, it may be $3 million, it may be $5 million, depending on what inflation does. So it's going to be interesting if the bull bear market structure continues, because you probably want to move your $5 million at the bottom of the bear market because you get the maximum amount of Bitcoin out, which then hopefully continues to rip. So a lot of it will be about timing.
G'day, Andy. This is just a bit of a follow-on from one of the topics of the Bush Bash last week about super, and also about the draft legislation that's coming in about compulsory contributions for wage earners versus additional contributions. And a lot of people, if they've got spare cash sitting around, they'll try and get their money into super to get more favourable tax treatment. Do you think it's wise, with that lingering? Obviously, if it's compulsory, it's got to go into super anyway. It's a bit of a no-brainer. Just put it in Bitcoin.
Yep.
But if you have money that you've partitioned off to put into super for Bitcoin, with those realized gains coming or unrealized gains potentially being taxed,
yep,
better off just buying personal Bitcoin.
So not financial advice, but voluntary contributions into super are insane if you can buy Bitcoin. Just buy the Bitcoin. Stack it yourself. Like, yes, there is a 15% tax benefit to moving it into super, but when Bitcoin's performing at 49% a year, that kind of blows the 15% out of the water. And do you want that Bitcoin locked up until you retire, or is it better to have access to it now, like in your own Bitcoin stack? So personally, I've stopped stacking into my self-managed super because now I'm not getting compulsory contributions because I'm running a business, not an employee. So those compulsory payments have stopped. So I am not voluntarily contributing into my super. If I do a salaried role again in future, I will 100% allocate the compulsory contributions, but I will never allocate any Bitcoin, voluntarily to super, because I would rather have access to that Bitcoin in my personal stack than it be locked up in the pension stack or the super stack, because I also don't know what's going to change and happen with that legislation or other legislation that's going to come down the line. So it's very hard for me, I just think the risk is too great. So
Unfortunately, we don't have any time for more questions. But I think the key point there is optionality. Stacking your personal capacity gives you optionality.
you do you.
100%. And I think one more thing before we finish is there's an awesome tool online called Nakamoto Portfolio. You don't have to chuck 100% into Bitcoin. You wouldn't believe what a small allocation can do to your overall performance on a risk-adjusted basis. So check that out. So, it's not about like YOLO, as Andy says, you do you, but I found this tool really effective, just trying to get other folks in the headspace saying like, you do not need to go 100%, like 10% can have a massive impact. Yeah. Awesome. Thank you very much, Andy. That was awesome.